Russell from California asks, because of where I live, I want to start investing in real estate, but I think it's best to do so in a different market than where I live. Gotcha. It's so expensive here. Yes, it's California. How do you pick a city to invest in long distance? What criteria should I be looking at? Greg, you want to give a stab at this, and then I'll take it.
I love that question. Yeah, he's right. It's too expensive in California, and one of the reasons why it's expensive is that they spend all the money in Sacramento, and the taxes go up all the time. So the costs go up and the expenses go up, so it becomes very difficult to make a yield in that market. Here's what I would say. The first thing that I would look at, once I understood what my investment plan was, how long are you doing this for, Russell? How old are you? When do you want to retire? Hopefully you're thinking about a 25-year investment strategy. So you have all the time in the world, and that's how you can play these long-term big picture trends that affect these markets. There's a lot of options. The first question I'd ask is, where outside of California do you have family that live? Did you go to school outside of California? Back to the college town thing, right? Is there a town there? Any place where you've got a degree of familiarity and therefore a certain degree of confidence about the market, you know something about it. If you've got family there, you may visit there every year or so, in which case, A, you can actually drive by your investments just to look at them, okay, and check that box. But B, if there's a mudslide happening in that town, you know about it because you're worried about your grandma, right? So there's like a surveillance element that doesn't take any extra work for you to keep your eye on your investment from a distance, okay? So let's say you decided, hey, I went to college in Austin, Texas, and so I love Austin. I still have friends there. Boom. Now you're checking that box for familiarity. Mm-hmm. Then you start digging in, researching. RentersWarehouse.com marketplace that's the old ownamerica.com. It's got wicked tools. I use them here every minute of every day to track the long-term value and demand drivers for a market. And we have some really cool tools coming out actually in March, a new research center online where you can do all the things that I do really, really easily and, of course, free. So now you start digging into Austin. You're going to find that Austin is one of the best markets in the country in terms of strong demand and price appreciation. A little bit expensive, so your yields are kind of low. You're looking at lower than 5% yield, but it's still a great market because you're looking at usually 4.5% to 5% appreciation every year, and that's not slowing down. So you pick based on familiarity, you then start doing your research, and then one of the coolest things about my company being acquired by Renters Warehouse is they've got branch offices. It's a national property management firm, but we've got local offices and local full-time employees in 40 cities. 41 actually now. So Austin is one of them. So if you go outside the market, knowing that ideally you may do something in Austin and you may decide to do something in Tampa, okay? And you can do that much more easily when you have a single point of contact. One company who's managing your properties, one profit and loss statement coming your way. Basically a single point of contact for multiple markets has never been done before. All right, and so that's another thing. I'm not trying to be self-serving here, but if you're looking across the country for markets that you're familiar with, then go to renterswarehouse.com and see where our locations are, because then at least you know that if you get psyched about this idea of going outside of California, you might do everything in Austin, but you might say, Austin's yields are kind of low, but the appreciation's great. Let me also buy a property in Minneapolis. Let me buy a property in Kansas City. Let's use Kansas City. Mm-hmm. That's another market Renters Warehouse is. There, the yields are higher. Get me a 7.25% yield, but the appreciation is lower. So there's always a trade-off, and there's a lot of wisdom in the idea of buying a low-yield, high-appreciation asset here, and then a high-yield, low-appreciation asset there. They blend together, but now you've got risk mitigation because you got them in separate places. The hurricane hits over here, you're safe over there, right? Mm-hmm. You're playing different trends. Midwest job growth because of the manufacturing negativity reversing itself. That's awesome. Austin being a blue city in a red state that's on fire right now as being one of the coolest cities in the country. That's great. You're playing the mega trends, but you get to play two different mega trends that hedge each other really nicely. All right, and there it comes from, if you can find an entity like ours that manages in more than one place, then you can have a single point of contact, one throat to choke, as they say, right? So if something goes wrong, you're going straight to your point of contact. Mm-hmm. One brand, one standard of service, two different cities.
And that's the leverage component. right? If you're looking at investing outside of your own state, regardless of California or New York, even the state of Washington, Seattle's really expensive, you need to be able to leverage other people's time and understand what that really means for you. It's not good enough to do everything yourself, because then you're not making money in your job or your business, and that's your primary active income earner, right? What you want to do is take that income and be able to diversify it across different markets and potentially asset classes, depending on what type of real estate you're interested in. We, on this show, we love talking about single family, and I think it's one of the best methods to long-term wealth generation. So you take a look at Indianapolis, you take a look at Atlanta, you take a look at Birmingham, you take a look at Charlotte, for example. We're talking about Charlotte in a second. And that one point of contact makes sense. Understanding how to use other people's money, other people's time, other people's energy, other people's expertise. All of this must fall into some type of cohesive plan on an execution strategy that you will put together and implement this year in 2019. And I highly suggest you do it. All right, take a look at some of the markets that we've talked about right here on the Power Plan Think Realty Radio and execute. That's the name of the game.